Personal finance, it used to feel really fragmented, didn't it? Like you had your bank over here, your stockbroker maybe over there, perhaps a separate app for budgeting,
Hmm.
just these walled gardens.
Totally separate silos, yeah.
But that whole picture is really changing now. We're seeing this fundamental shift, a kind of emerging, where financial services are almost becoming invisible utilities, baked right into the apps we use every single day.
Hmm.
So today we're doing a deep dive into what's driving all this. We're going to unpack open banking, that's the sort of regulated plumbing, and then its really practical side, embedded finance.
Right.
And our mission for you listening is to get past those buzzwords and really understand how these ideas are, well, radically reshaping how you handle your money.
Yeah.
And we're going to use the UK as our main case study because they've been pretty aggressive on the regulation front.
Yeah, you really have to start with the UK's regulatory scene. It's basically the foundation for everything else we'll talk about. What's fascinating is that the UK didn't just sort of wait around for the industry to maybe innovate. It actually mandated it. It put itself right at the forefront of open banking rules in Europe.
Mandated, huh? So not just suggestions.
No, not at all. It was about forcing standard ways for systems to talk to each other.
Yeah.
And that regulation, that's the absolute key because, without those rules, there's no proper legal or, frankly, technical way for different financial companies to share your data securely, even if you say it's okay.
Right. That makes sense. And this is probably where we should clarify something. People often mix up open banking and embedded finance, but they're not actually the same thing, are they?
No, they're definitely related but distinct.
Open banking is the mandate, like you said, it built the pipes.
Yeah.
But what exactly is going through those pipes? What's in that handshake between institutions?
Ah, that's a great question. That handshake is where it gets practical. We're talking about mandated, standardized technology specifically. APIs, application programming interfaces.
APIs, okay.
Think of them as like secure digital doorways or maybe standardized messengers. They make sure that when, say, Monzo needs to ask your credit union, hey, how much money does this customer have? The message is instantly understood, it's secure, and it follows the rules.
Gotcha. Secure messengers.
Exactly. And this immediately lowers the barrier, the friction, and the cost for new companies wanting to enter the market. So open banking is the infrastructure, the regulated pipes for moving data securely. Embedded finance is the product or the service that gets built on those pipes. It lets non-banking features live inside your main financial app.
Okay. So let's unpack that more. How does that high-level policy mandating these APIs actually translate into embedded finance for the person on the street? What difference does it really make to someone using these apps today?
Well, the genius of the UK's approach was that this regulatory push basically created a perfect environment for financial startups to thrive. The challenger banks.
Ah, right. The Monzos and Revoluts of the world.
Precisely. They didn't have decades of old, clunky computer systems, legacy infrastructure to deal with. They were built from scratch to use this new open banking infrastructure, and that gave them a massive head start over the big established banks who were trying to kind of bolt this new tech onto really old systems.
So it's a real competitive advantage built right in.
Absolutely. And you see that playing out right now in the market. We can point directly, like you said, to the key players that the sources always highlight. Apps like Monzo, Revolut, Starling Bank.
They're the poster children for this.
They really are. These platforms show exactly what embedded finance looks like in practice. They aren't just places to hold your money anymore. They're these multifunctional financial hubs, almost like ecosystems.
Okay.
See, for the old traditional banks, the bank account is the product. That's it. But for these newer challenger banks, the account is just the starting point. It's the central place where they embed all these other specialized services things that used to mean downloading a separate app, getting a separate login, sometimes even going to a whole different company.
Okay. This is where it gets really interesting for the everyday user, I think. If these challenger banks are using these mandated pipes, these APIs, what specific tools are they embedding? If I'm, say, living in London, what can I actually do inside my main banking app now that used to be a real pain?
Yeah, well, you hear the word frictionless thrown around a lot in tech and finance, right?
All the time.
But embedded finance, it's kind of the textbook example of actually removing that friction. You don't have to manually download your bank statements anymore or upload PDFs to some budgeting app or wait days for things to update or reconcile. The tools are just there, already built in, and the data is flowing securely and crucially in near real time. that speed is their weapon.
Speed and convenience. So what are the big ones? What services are people really using?
Precisely. And when we look at, what everyday Brits are actually using inside these apps, three main types of integrated tools keep popping up again and again. Budgeting tools, investing tools, and lending tools.
Budgeting, investing, lending.
Yeah. And they were likely prioritized because these are tasks that traditionally had a lot of friction, but also offered high value if you could make them easier.
Makes sense. Let's take budgeting first.
Okay. So budgeting. Traditionally, you might have had to actively download something like, I don't know, YNA or another app, then connect all your different bank accounts, maybe your credit cards, and then spend time manually sorting transactions.
Right, I remember doing that. It took effort.
A lot of effort. But with platforms like Monzo or Starling, a lot of that categorization and analysis just happens automatically. The app learns your spending habits super quickly. It sees you spent, say, £10 at Pret for lunch, and boom, it categorizes it instantly.
Okay, that's neat.
But more importantly, it uses that real-time data to do things like create savings pots.
Savings pots. So it's not just tracking, it's actively helping you save. It's more prescriptive.
Exactly. It's analyzing your cash flow and then proactively suggesting or even automating actions.
Can you give us a really concrete example of how that embedded budgeting works?
Absolutely. So the sources describe features where the app tracks your incoming salary and all your known outgoing fixed costs, things like rent, utility bills, maybe subscriptions like Netflix. Based on that continuous analysis, the app can figure out how much spare change or excess cash you might have each day, and then it can automatically sweep that small amount into a separate virtual savings account, one of these pots, maybe one that earns a bit of interest.
Wow, so it saves for you without you really thinking about it.
Pretty much. You don't consciously decide, I should save £1.50 today. The app just does it based on your actual up-to-the-minute spending, which is data the old banks just couldn't access or process nearly as fast.
Okay, that's a huge convenience jump for budgeting. Let's talk investing. That always felt, I don't know, complicated, maybe a bit scary for a lot of people. How does embedded finance make investing sort of invisible?
Yeah, investing is a great example. This is an area where Revolut, for instance, really made waves. They seem to recognize that setting up a big formal brokerage account felt way too complex for the average person who just wanted to dip their toe in.
Right, it feels like a big commitment.
Exactly. So they embedded micro-investing and fractional shares right into the main app where you do your day-to-day spending. So maybe you buy a coffee for, say, £3.60.
Yep.
The app might pop up a little prompt asking if you want to round up that purchase to £4 and then instantly invest the 40p difference into, say, a tiny fraction of a share in a big index fund like the S&P 500.
These 40 pence.
Yep. Or whatever small amount. The key thing, the really crucial takeaway here, is that you're not clicking away from your main banking screen. You're not navigating to some separate, complicated investment platform with charts and jargon.
And right there.
It's right there. Investing just becomes this little behavioral nudge linked to an everyday spending habit. It takes the barrier to entry down from needing hundreds of pounds and filling out forms to just pennies and literally a single tap.
That completely changes the psychology around it, doesn't it?
Yeah.
It stops being this big, daunting decision and becomes more like a background process, accumulating over time.
Absolutely. It democratizes it in a way.
Okay, so that's budgeting and investing. Let's hit the third pillar you mentioned, lending. Getting a loan traditionally means waiting, credit checks, gathering documents. It can take weeks. How do these open banking pipes make lending like instant and personalized?
Yeah, the speed here is, again, the killer feature because those mandated APIs allow the platform, say Starling or Monzo, to get instant secure access to your validated real-time financial picture.
And not just your account balance.
Exactly, not just the balance. We're talking about the consistency of your income, your bill payment history, even your general spending habits. Because they have this rich, up-to-date data, they can run a highly accurate risk assessment in, well, seconds.
Seconds, not weeks.
Literally seconds in many cases. This means the app can potentially pre-approve you for a personalized loan offer based on data that's minutes old, not months old, like in the old paper-based world. So imagine you're using the app, you make an unusually large purchase, maybe your washing machine breaks down. An embedded lending offer tailored specifically to you might pop up almost instantly. It already knows roughly what kind of repayment schedule you could likely handle based on your cash flow history.
That's incredible.
That leap from a paper-heavy, maybe 3-week process down to a potentially 3-minute digital interaction. That's the definitive edge of embedded finance in lending.
Okay, I have to jump in here, though, because While the convenience is just undeniable, doesn't putting all this together raise some, I don't know, pretty big concerns? You're talking about one single app potentially handling your budgeting, your spending, your saving, your investing, and now your borrowing.
Hmm.
Isn't there a real risk of concentrating way too much financial power and, frankly, data into just a few of these big ecosystems like Monzo or Revolut?
That's a critical question. And yes, the tension there is absolutely real. On the one hand, the UK regulation mandated the open banking infrastructure, which in theory is supposed to level the playing field and encourage competition.
Right, more players, not fewer.
But on the other hand, user behavior tends to drive consolidation. People like convenience. We gravitate towards that single dashboard where we can see and do everything in one place.
So convenience wins out.
Often, yes. But there's the crucial flip side: data privacy and control. Because this whole system operates under the rules of open banking, the fundamental principle is supposed to be user control. Your data can only be shared if you give explicit consent, and that consent usually has limits, like being time-bound.
Okay.
And importantly, if you, the user, decide to revoke that consent, the pipes are meant to shut off immediately. So while yes, there's a huge amount of data potentially flowing, the legal framework is designed, at least in principle, to keep you in the driver's seat.
That's vital context, thank you. So wrapping this up a bit, what does this all really mean for the market overall? We're seeing this powerful combination, regulation led by the UK, forcing standardized data sharing.
Right, the pipes.
And then really aggressive tech innovation from companies like Monzo, Revolut, Starling, who are rushing to use those pipes to deliver these incredibly seamless integrated services.
And the end result is a pretty profound, almost forced change in how we behave with our money. Users are shifting from thinking, okay, I need to go open a savings account at a different bank, to just, oh, I'll just switch on the savings feature inside the app I already use.
Hmm.
The whole definition of what a financial product is seems to be changing. It's less about which institution you're with and more about the set of digital features you have access to.
It's moving from place to function.
Exactly. And this really raises the important question for you, the listener, to think about. As more and more financial services get embedded like this, as the complexity gets smoothed over and replaced by just utility, how many of those separate financial companies or niche apps that we use today will simply fade into the background? Will they just become features inside something bigger?
That is the perfect place to leave it. We've seen how the UK's strong regulatory approach kind of paved the way, and how apps like Monzo, Revolut, and Starling picked up that ball and ran with it, delivering integrated services, especially that instant, super personalized budgeting, the easy micro investing, and the really fast lending all right there inside your main banking app. It's definitely making finance feel less like a bunch of separate chores and more like a smooth, almost automatic utility.
Mm-hmm.
So for our final provocative thought for you to chew on, we've talked about budgeting, investing, and lending being actively embedded now. What do you think is the next big financial service? Something that's currently quite separate, maybe something like insurance or perhaps foreign exchange, maybe even really complex stuff like mortgages. That's the next thing you expect to see basically disappear into a seamless automatic background feature within your primary financial app.
Think about what causes the most hassle right now and where open banking could just wipe that friction away.
Good question to ponder.
Indeed. Thanks for diving deep with us today. We'll catch you next time.